James Muratha, Regional Director, Stanlib. Pleasure to be speaking to you today.
Thank you. Welcome.
Of course, you're launching a revolutionary product, aren't you? You're in the selling period for this an income REIT, Fahari income REIT. If I might just take us a step back before we go into the details of the offering. Can you tell us a little bit about what's happening in the real estate market in Africa and in East Africa? What's been going on?
Right. Yeah. Right. Thanks. Well, Ali, and welcome.
Thank you.
The real estate sector is a very interesting sector, and it's been booming in Africa, as you may be aware. There has been significant demand of quality real estate across Africa. I think the challenge we have is just meeting that demand across all sectors, whether it's office, residential, warehousing, just name it. And having proper vehicles through which investments could be channeled to grow that sector. I think the demand, and if you look at the demographics, we're growing faster than the supply of quality real estate.
Yes.
And hence I need to come up with proper structure that will help to meet that demand. I think that's one of the challenges we've been facing also is the cost of funding such kind of real estate. But again, with the introduction of REITs, that goes to helping catalyze the growth of that sector and help to meet the needs, the real estate needs.
You were mentioning just earlier that there are a number of REITs in South Africa, but is this one of the first REITs in the rest of sub-Saharan Africa, or was this, is this a first to market for outside South Africa?
Yeah, outside of South Africa, South Africa has about 5 income REITs. This is the first one in East Africa. There are 2. There's one in Ghana and one in Nigeria. But this is the first income REIT in East Africa. Yeah.
Fantastic. So if I can, with East Africa real estate markets, we've seen, I think it was in 2011, Knight Frank put out these statistics saying it was one of the best performing markets, I think in 2011, or was it 2012?
2012, yes.
2012. What's been going on here? I mean, everywhere we turn, we see new shopping malls, huge new buildings being built. Our skyline is changing every day. Is the trend you described in Africa happening here, or are there any nuances to what's going on?
Exactly. The trends are being reflected here, and even more so because Kenya is a hub. If you look at East Africa and the geographical location, we actually have a geographical advantage. I mean, you've seen many companies come to set up in Kenya. Many international companies, Google, Microsoft, and just name it. They come to set up in Kenya. As a result, there is a lot of demand for, just name it, office space. There is demand for residential. If you also look at our demographic alone, I mean, we are only 43 million today. Be about 60 million in a few years' time, by 2030. So who's going to accommodate all those people? An additional 15 million people. Where are they going to shop? Where are they going to go to school? Hospitals, name it. So there'll be significant need for infrastructure.
So you think it's a sweet spot, do you?
It's a sweet spot, yes. Yeah. So this is the best time for the country, and even East Africa in general. Yeah.
Can I now come back to Stanlib, which is yourself? Can you just tell us who you are? Because I think that some people are not sure. We were discussing, if you just don't mind.
Yeah. Now Stanlib is an asset manager. It's a fund management business. We've been in operation in Kenya since 1998 and licensed both by the Capital Markets Authority and the Retirement Benefits Authority. So all they do is just manage money on behalf of third parties for the benefit of getting them a good return.
Yes.
So we get the money, and the money is invested in shares, in bonds, in property, private equity, asset classes that help to grow your income, but also diversify your risk. Exactly.
And this you were describing to me earlier as an alternative investment. You see real estate as giving people an alternative investment,
right,
for their savings. Is that right?
That's right.
Yes.
Because for the longest time, we've only had 2 traditional asset classes: bonds and equities and shares. So that's where people have been investing in, because again we have clear structures for those investments. But now there's been demand also for diversifying. So property now as an asset class has not gotten traction because there's no formal mechanism of investing.
Yes.
So if people wanted to get into property, then you'd come together in a group of people.
Which was where it had evolved, wasn't it? The very consortia type investors.
Exactly, which exposed investors to risk, because then suddenly, you didn't, it's not your area of expertise. So you get duped. You buy land on public or no public land, or, no integrity of titles, and, taking development risk and things that people are not conversant with, and people have burnt their fingers. So it was apparent that we needed to introduce a property asset class that also allows investors to get proper access to that sector, to the property, without all the challenges and issues to do with property, and just annual return, just like any other investment. Yeah.
So do you mind just now telling us a little bit what's the difference? Because there are two types of REITs that are allowed are allowed now. That you said there's a development REIT and an income REIT, and this is an income REIT. But what's the difference?
Right. Now, a development REIT is a real estate investment trust whose focus is on development. So what it does is that it gets a piece of vacant land and develops it. So it takes a lot of development risk. And what that means is that the investors then have to be qualified investors. Not just anyone can invest in a development REIT. And I think the minimum required to invest is about 5 million shillings.
Okay.
Because it's only for a certain category of investors who can absorb risk. An income REIT, on the other hand, is a real estate investment trust, or a company that buys only income generating properties. So properties that are completed and have tenants who are paying rent. So there's no risk. And what happens is that the requirement is it has to be at least 80% occupied before it's sold into a REIT. So that's the requirement.
Wow.
Yeah, so you have to have at least 80% occupancy before it's bought by the REIT. And then minimum of 80% of that income as well has to be distributed to the shareholders at least once a year. Yes.
So you can only retain as a REIT the 20% of the income?
Yes, you can retain up to 20% of the income, yeah. So the minimum is 80%, but you can choose to distribute 90 or 95% of the income.
Okay.
Yes.
Can I just go back? You said 5 million for the development REIT. What is the ticket price? I saw 20,000 shillings, is that right? Anyone can own a piece of, can be a landlord. I saw someone tweet for 20,000. Is that correct? The minimum is 20,000?
Spot on. That's correct. Yeah.
Yes.
So what we've tried to do also is to make it as affordable as possible to the mwananchi. We want it to be, for anyone to be able to own a piece of the property market in Kenya, in a proper diversified vehicle that's investing in residential, in office, in retail, malls, in warehousing. So when you the 20,000 shillings, you can truly become a landlord. Yeah, for the first time.
Fantastic.
Yeah.
And going back to the REIT itself, now you were saying that you have got some assets already in the REIT. Is that correct?
Right.
Do you want to tell us what those are?
Yes. So what the law requires is that when you're setting up a REIT, you've got to have what we call seed properties.
Yes.
So it's got to have some assets. But also, you can generate a pipeline of assets as well. Once you launch, then you have other assets that you can bring into the REIT. So the income REIT, the Stanlib for income REIT, has a few assets. And these assets cover retail and office and warehousing. But obviously that asset base will grow and will get diversified properly as the REIT grows, so that now you diversify into other property sectors. But for now, one of the key assets here is the Greenspan Mall, based in Donholm, which is a strong shopping mall, and all that income again to the investors will filter back to the investors. Very good growth potential, very good catchment area, a strong growth potential for the mall itself. And we believe it's going to provide very strong value for investors, not just now, but in years to come.
So this is the anchor investment currently in the REIT.
Exactly.
And then, of course, as you raise more capital, you'll make more investments.
Yes, you've got a pipeline of other investment will come in. Yes, both that cover the, again, retail, again, office, again, residential, and warehousing. So again, that will keep growing and diversifying the portfolio, but also geographically. Because again, you don't want this to just be a Nairobi-focused fund.
So what is the focus, just Kenya?
The focus for now is just Kenya. Because the law only allows for the investment to be in Kenya. But we are hoping over time that it will be opened up to also cover East Africa. But
and at the moment, you want to diversify. You don't want to be concentrated purely in Nairobi.
Exactly. So the goal is to not just diversify from an asset point of view in terms of the retail or shopping or or office or that kind of stuff, but also to diversify geographically as well, so that you're not just in Nairobi, you follow the GDP of the country. So in Nairobi, Mombasa, Kisumu, Nakuru, just invest in the country as well. Yeah.
So can we go back now, James, to the issue, the Fuhari REIT? 20,000 minimum size, maximum can be anything, can it? Yes? It closes when?
It closes on the 18th. So we managed to get an extension from the 12th to the 18th. And that was really as a result of the demand from investors. Who needed more time to prepare themselves and understand it and put themselves together and just fill out the
because it is a new product to the market, right?
Exactly. And you see, this is not the same as any other IPO. With a typical IPO, let's say Kengen or Safaricom, those are companies that had a history. So when you get to the IPO stage, people knew them. But see, this is an income REIT, so people need to understand what an income REIT is. So it's taken some time to educate the people, but once they understand, they're very excited and really they are really investing.
Yes, no, I mean Kenyans have a very strong belief in bricks and mortar, right?
Right.
What are the expected returns? Because James, we've had a lot of volatility in the money markets. We saw the T-bills go up considerably. What's the profile of return that an investor is expecting? What are you saying to them?
Yeah, now, when we are taking on or considering a property asset, there are certain minimum standards that it has to meet. One of them is a return standard. And we expect
this is
a
the
minimum
investment
return
committee you must have that looks
into it and makes a decision whether it first qualifies to even be considered as a property for the seed for the fund. One of them is a return expectation. It has to have a minimum of 14%.
14%.
Yes, minimum of 14%. All in. That's before you value engineer to grow it. Just like you'd buy, let's say a house and modify it and sell it for more. Or earn more income. So that's a bare minimum. And then once you buy the property, then there are things that you do, whether it's rejigging the tenancy mix, for example, or licensing, or a few other things that you do to enhance that return. So that's where the fund management skill comes in, to make sure that now we move that return from the 14% and move it up the ladder to 18-20%, moving up. And on all the assets that we've acquired, on the seed properties that we've acquired, they have significant potential for enhancing the revenues. So that's how we look at it here. But also remember, once it starts trading on the stock exchange, then also the return on the stock exchange will matter, because now it will be trading as a stock. So as the properties get valued, then you expect the stock price to track, to keep growing based on the valuation of the properties. And the good thing with that is that because it's listed, and if you need to sell at some point, then you can sell and realize your capital gain.
It's a more liquid asset than the underlying asset, theoretically.
Exactly. So you see, when you buy if you buy a property today, selling it can be a challenge. It may take you months before you get a buyer. But in this case, you can exit when you need to. Obviously, it's an income REIT, so you want to stay there and earn your dividend and earn your income. But again, if you needed to for whatever reason, then you can exit as quickly as you need to, or you don't have to sell the full property. You can just sell the portion of what you need, which you may not be able to do if you have your own property. Which also remember, that if you have your property, then you also have concentration risk as well, because your property is in one location. So if something happens at that location, then you suffer the full risk. But remember, the REIT is diversified because it's got properties all over the place and across the country. So if something happens on a location, you're still protected from a diversification point of view.
You were telling me about the tax, that there is a tax benefit in being an owner of a REIT. Can you tell us about that?
Yeah, and that's a very important point. And I think that's what people would ask, where's the catch? The REIT is a tax-exempt vehicle. Income from the REIT is not taxable. That's a major benefit, because if you have your own rental units that you're renting out, you'll pay 30% tax. But the REIT does not pay taxes. So what means you have, it's able to generate more value. So there's no tax at the level of the REIT, and also when it's distributed to you as well, there is no tax on that income as
And
per Section 20 of the
is
Act.
that expected to stay in place? Is that a incentive that was put in place for just the early stage of the REIT market, or do you think that's something that the government's committed to?
We think it's something the government has been committed to. Again, first of all, it's because the government wants investors and the Kenyans to participate and to benefit from the property, from the property sector, and to be part of the deepening of the capital markets. We want to encourage a culture of savings, a culture of investing. So as a result, the government has decided to provide that benefit, and it's for investors to take that benefit. I mean, the Revenue Authority is not in the business of giving taxes away,
No.
but also the resultant activity from making the REIT exempt from tax will actually generate more revenue for the government. For example, we believe the income REIT will provide an exit mechanism for developers.
Yes, you were saying.
Yes, to sell their properties into the income REIT. So developers are not in the business of developing and keeping the assets. They want to develop and sell and keep developing and selling. So we believe that activity in itself will provide more employment. More employment means more pay-as-you-earn taxes. It means more activity from all the other services that are offered through that area, whether it's the architects and the valuers and the surveyors and the civil engineers. So we believe that activity will generate more revenue for the government than what they're foregoing in the REIT. But I think the thing for investors is to know that here's a tax-efficient vehicle where you can invest in and you don't have to pay taxes. You're a landlord, and you don't pay tax on the income.
Yes.
So it's something to take advantage of.
Yes.
Yeah.
Do you think that message has come through? People understand it?
I think it's coming slowly. I think people are still, usually just a bit skeptical.
Yes.
But there's no catch. It's there. That's what the law provides. The REIT itself is tax exempt, and that has been confirmed by the Revenue Authority. Yeah.
So going back to the REIT, you've already sold some shares, I believe, to Stanlib. That was the seed properties?
Right.
Is that correct?
Well, that's correct. Yes.
IFC, I saw, have committed to buying some shares as well.
Yes. Yeah. The IFC has come in as an anchor, also anchor investor. They've committed to invest up to $15 million, which is up to 1.5 billion shillings.
Yes.
And the shareholder, again, Stanlib as well, has come in and through the group as well, put in an extra 1 billion shillings.
Yeah.
And again, that capital is locked for 3 years, just to make sure that the investors know that we are there to stay.
Yes.
And to give them comfort. The IFC is also keen to also see local participation. They'd like to see that our local institutions as well are supportive and also ready for deepening of the capital markets. Because really what you're doing is deepening the markets.
Yes.
By providing this as an asset class. That's the way countries like Singapore grew.
Did it?
That's how they grew. Look at Australia, which has the largest number of income REITs.
It does it?
Yes. And that's how the countries grew.
Yes.
So this is just the start of a similar venture in Kenya. So this is the only way we'll be able to meet our real estate needs, because while the banks are trying as hard as they can, their capital is not meant for these kinds of development. So they need to keep churning their capital, but we're using short-term funds to fund long-term projects. But you want to have a mix of that, but also bring in the other investors who have a longer-term view to provide long-term capital for growth of infrastructure of real estate. Yeah.
Any other items that you think we need to share about the REIT?
Yeah, I think for me it's just to encourage the investors to take advantage of this opportunity. Now one has a chance to become a landlord in a proper diversified vehicle, and the amount of due diligence that's required to go into this vehicle is significant.
Yes.
So that investors know they're protected. The fund is regulated, or the REIT is regulated by the Capital Markets Authority, but also it has very strong governance structures as well. But also remember, whatever comes into the REIT goes through significant due diligence, whether from a financial point of view, to make sure that the finances make sense, from a tax point of view as well, to make sure that it has no tax obligations, from a legal point of view, making sure that all the documentation, the title documents, the property is not on road reserves, that kind of stuff is done. So really, and then there's a lot of engineering due diligence, whether it's structural, civil, mechanical, all that stuff has to be done, and it's required by law. And all the documents are available to investors for inspection whenever they need to at our offices. So again, from an investor point of view, you can do what you do, and you know that your money is working for you through the REIT. So you're a landlord, and you don't have to worry about how the asset is being managed. How do you get the tenants? Where do you get the tenants? So and so is coming in, so and so is going out. You know, so you don't have to worry about anything. All you have to do is just invest and earn your tax-free return. Yeah.
And let me leave you with a final question.
Yeah.
We've seen a lot of innovation at the capital markets here in Kenya. Do you see this as very innovative into these markets? You're the first to market.
Right.
Quite a revolutionary position.
Right.
Are you a bit of a revolutionary, James, over there?
I'm not sure I'm a revolutionary.
A real estate revolutionary.
I think it's
the Donald Trump of East Africa.
the Donald Trump. That's a good one. I guess it's maybe just maybe more of trying to deepen the capital market, because that's what it's all about. You know, someone has to take the lead.
Yeah.
You know, you could have waited for somebody else, but that could have taken years. But one had to come out and take the lead. And what you're saying is that even with the REIT itself,
yes.
You know, we'll keep refining it as we go along. But someone had to take the lead, and you know, we felt at Stanlib that we would come in and do that for the sake of the industry. And the key thing was to provide a vehicle where individuals would come and invest through.
20,000 shillings,
you know, 20,000
is really deepening the savings world, isn't it?
Exactly, exactly. More for financial inclusiveness, so that people don't feel that the country belongs to a certain class and not a different class. So everybody is able to participate in the growth of the country. Because people would come to me and ask me, now, we hear the property sector is booming.
Yes.
So how do I benefit? You know, what do I do? So that addresses that, but also for institutions like pension funds, for example.
Would they be a big buyer of this REIT? I would have thought they would be.
We would expect them to be.
Yes.
We would expect them to be, and we are hopeful that they will. They will contribute through the asset managers, because they are a key driver to the success of this kind of initiative. But also recognizing that pension funds are also key in giving confidence to the local investors as well, to see that institutions are participating and are open to deepening the markets. You know, they give that kind of confidence and impetus to such initiatives. Now, I think when you look at it again, and you asked me earlier, for Kenyans generally, because it's something new, you know, Kenyans are usually very skeptical, yeah? But also just to make them or give them comfort that a lot of work has been put into this. All the levels of government or the regulators have been extremely supportive, whether it's the Capital Markets Authority, the Retirement Benefits Authority, the Kenya Revenue Authority, the Nairobi Securities Exchange, the Treasury. Everybody is actually aligned, and everybody wants this to succeed. Again, because of the positive message it sends that we are ready as a country for deepening the markets. We are ready for the next level. So even as we introduce other products like the exchange-traded funds, the ETFs, you know, the international community will know that we are actually ready when you talk about derivatives. So I think it's upon all of us to ensure that we succeed, or this succeeds, because then it gives confidence to anybody else wanting to launch a REIT or the D-REITs or the ETFs or the derivatives, you know, to know that actually we are ready. But also not to be too skeptical, because sometimes we miss the boat, because you know it takes, you know, this journey took many years. Since 2006.
You've been looking at this.
You've been looking at this. Not as Stanlib.
Yes.
For us, we've been looking at this for the last 5 years.
Yeah.
But the journey started over 10 years ago. And initially, when it came out, you know, the market was not ready. So it's taken almost 10 years to get to this point. So it would be a shame not to be able to, or to wait another 10 years. But again, this is it's not a Stanlib product. This is a national product, because it's got significant national implications in terms of the growth. So any investor in the REIT will actually be a major participant in the growth of the country and the economy.
I shall leave it there. Thank you so much.
Thank you very much.
Thank you very much.
Thank you, Ali. I appreciate it.
I appreciate it.
Yeah, thank you.